Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 8th of October. And I have sound. The audio is working, hopefully. I see bars on my end. If you can't hear me, say something. That's a joke. Okay, good morning, everyone. And I'm just bringing up some screens here on the side. On my other monitor. See how many requests I have to go over charts. And we have a few. Okay. So let's begin with who won the debate last night. If anybody watched. Opinions. I think that there was a more clear winner last night than
is considered probably one of the greatest investors of all time.
Than the last time around. You gotta be kidding me. You give me trouble today again, please. I don't know if anybody can hear me right now, but again, I'm having some technical difficulties. Unbelievable. All right, we are live. Okay. All right, good. Okay, good. It just came back up. Good stuff. WG Shocker, good morning. RL. Pence, right? Yeah. Yeah, I for giggles, I typed up CNN, which I rarely do. I just try to get an opposing opinion to keep an open mind. And let's bring it up really quick. It was funny the way they did it. I mean, in a way, they conceded that she lost, but the way they did it was really funny. Let me bring it up. Here it is. Harris didn't let Pence explain away Trump's failures. So it's really well written, man. So they wouldn't let her. She didn't do a good job of explaining away his failures. Then they try to make a deal about Harris on Pence's interruption. I am speaking. She did a good job of managing him. I'll give her that. She showed class there. I'll give her that. But it was funny. Good debate. Healthy debate. Points to both sides, but I think that Pence took it. Okay, this morning we're going to have jobless claims. Big number. The expectations for initial jobless claims of 820,000. And I think it's going to be a beat. And I think the president has known it, and that's why he walked away from the negotiation table. That's the bet I'm making. And that would be a good thing. Okay, let's go to the pre-market futures. I was up so late last night. My brain is fried. The dollar, which has really wagged this market of late, It's down, but not out. Potential higher lows. This is a 4-hour chart. These all be 4-hour charts. So what we're looking for here, we'll set up a tripwire within this trading range. And I don't trade off of these. It just gives me a reason, if it breaks below the support level, to be hyper focused on the dollar, because I may want to rearrange the portfolio a bit, because we did bail on a lot of our gold mining trade, and it's a good thing that we did. I don't regret it. But if the dollar goes, well, we're going to want to be buying those gold miners back. We still have a position in it, but it's not as big as it was. We booked a lot of profits there. What else do we have? Let's go to gold. Let's talk about gold for a second. Gold. Higher lows. No, well, you could argue that there's a breakout here. A small intra trading range breakout. We'll do another tripwire here. Again, if we break out, I'm going to want to be hyper focused on adding more. So we're having higher lows on gold. The question is, do we put in higher highs? No breakout yet on RSI. If we have a big beat on initial jobless claims, expect gold to pull back and the dollar to rally. But bad news is good news for gold. Bitcoin, it's simply in a trading range. I've seen some comments out there where people are bashing Bitcoin. I don't know why they're bashing them. All they're doing is consolidating gains, which is always a good thing. And not just Bitcoin they're bashing. Any cryptocurrency that's not ripping through the ceiling right now. No breakout yet on RSI, so no reason to go buying or adding to a position at current. Taking a look at equities. The Dow Jones, which has been in fuego, is up another 1/3 of a percentage point this morning. What's strange here is that while we're putting in higher highs on price here, you would expect to see a breakout on RSI as we make higher highs, but we're not getting it. There's the breakout point there. So here's where we broke out, and RSI is languished. Strange. A little bit of a divergence going on there. Let's take a look at let's check out the VIX. All right, the VIX is down over a 0.5 percentage point. That's a good thing, because I suspect that the S&P 500, I'm such a genius with the Dow up, is going to be up as well. And wow, great job, Bob. Yeah, we're up. A little bit of a topping action this last bar. And unlike the Dow Jones, where we didn't have a breakout on RSI. We have one on the S&P 500. Tail of two charts here. Let's go back to the Dow for a second. Keep this in mind. Price, RSI. Dow Jones. Price, RSI. This is what it's supposed to look like. But again, a little bit of topping action here. So we may pause a bit. Where are my Nasdaq 100? My charts are all messed up today. Let me go back and check my audio. Okay, so I could still be heard here. Good. I had to run updates yesterday and make some adjustments, so it looks like it's working. Good stuff. Okay, good. Nasdaq 100. Breaking out of a base. I should say has broken out of a base. RSI confirming. Good looking chart. Inverted head and shoulders set up. Left shoulder, head. Here's the W formation. Here's the pivot point. We're clearly above the pivot point. Now we're moving to higher highs. So a strong chart here on the Nasdaq 100. And it is up nearly 3/4 of a percentage point. Looking good. Taking a look at crude oil prices, very important to the market. And they've had a good week so far. And we're up 1.5%. I mean, Pence last night did a very, very good job of explaining the rhetoric, and not just, I shouldn't say rhetoric, I mean, it's their policy of Biden, Paris, that they want the Green New Deal. And there's no room. I mean, oil producers are what the coal mining companies were back in, the late 90s and into the Obama years. They're dinosaurs. So that's the way these oil companies are going to be viewed. And I guess to a certain extent, nat gas, which is a very clean fuel. So we are long of energy, and it's treating us well now, but I'm concerned about it going into the elections. So we have an ExxonMobil trade paying us over 10% in yield right now. I really don't want to dump it, but I may buy. So I'm very, very short term, out of the money or at the money, put options as we move into election day to protect that position. Let's stick with commodities here. Let's go to silver. Silver, as we captured support, we may be adding to silver today. But I'm going to wait until we see how the market settles down. And that's usually late in the afternoon before I press a buy button. We don't day trade here. We set up for longer term positions. And I want to make sure that if we're up on the day, that we're closing up on the day and not fading. We've seen way too much of that of late. Corn futures, ripping. Weekly chart real quick. Ag prices or ag futures, which are commodities, are ripping. Corn's going up a lot higher. Let's take a look at wheat. Folks, this is where inflation's at. Oh my God, look at the breakout here. Wow. Let's go to, let's bring up, I believe the symbol is wheat. I think this is a Tetrium fund. Yep. Wheat. All right, it's overbought relative to the third standard deviation Bollinger Band, but let's see if I have a saved annotated chart. Yep, I do. Look at the breakout here, folks. I'm going to be talking about this tonight, and I just reminded myself. Hey, Sam, good morning, buddy. Tonight, Thursday night, Stock Charts Live, we're going to be reviewing the weekly charts. And in particular, I'm going to be talking about commodity prices, I think. I mean, this is explosive. This is huge. This is a big, big breakout on wheat. I'm officially calling the bear market in wheat over, assuming that we close above 592.50. I think it's the bushel. I'm not sure what they sell it, but I don't want to come off as if I do. But I think it's a bushel. Huge breakout. Somebody correct me if I'm wrong. I'm not sure if it's by the bushel. I don't want to put statements out there and I sound ignorant and pretend that I know what I'm talking about when I really, honestly and truly don't. Big breakout. Huge. I'm very impressed. But back to that daily chart. Just beware. If you're looking to buy an ETF, we're extended. I mean, let's take a look at the DBA really quick. Beautiful bullish reversal bar. Oddly enough, this is a basket of commodities, so it's not so odd. But I'll say oddly enough, given the strength of wheat and corn, no breakout yet, month over month. This is a buy. This is a buy. It's happening. Yeah, look at the move up higher yesterday. We are clearly breaking out here. Very, very attractive chart. Today, tomorrow, the latest, we're going to the 50-day moving average trade above the 200-day moving average since December, let's call it December 19th of 2019. The bear market has come to an end. Good to see. All right, let's go back to futures. Let's go to soybean since I'm on the ag. Trade soybean futures. Look at this. Look at this breakout. This is a weekly chart. Beautiful. 4-hour basis. We're extended. All right, so I think that pullbacks on these ag names, we'll be looking to buy them because while short term they may be a bit extended, longer term the macro story is they are going up. Why? They're printing more and more money. You're going to have a lot of cheap money floating around out there chasing too few goods. And once this economy begins to open back up and you get the velocity of money picking up, brother, look out above for inflation. All right, let's take some chart requests. Before I do that, let's go to bonds. That's the wrong chart, Bob. There you go. Okay. We're flat. The jobs data. Everybody's waiting for the jobs data. 8:30 a.m. Eastern Standard Time. Let's do some chart requests. Ag, folks. Again, join us tonight. There's a link below while I'm waiting for this other page to load up here on my other monitor. There's a link below. If you're not on our email list, if you're on our email list, don't enter your name. I don't want you to get multiple emails of when we go live. I send out a 15-minute alert prior to us going live. If you're already on there, don't enter. If you're not on our email list, please enter so that you could join us. All right. Let's do it. XPO for Franklin. My main man, Franklin. A gentleman. You can see I was running some scans last night. I had one that fired off yesterday. Where is it? Yeah, Boeing fired off yesterday. We're long of Boeing already, but it fired off an alert yesterday. All right, we'll talk about that later if anybody's interested. Let's bring up XPO. I believe that's an energy play. Maybe not. Okay, let's do monthly chart first. Nice breakout so far on the month. I have gone over this one before. Very nice breakout. A little bit of a fade. No great shock. Not a lot of overhead supply above. Weekly chart. We have gapped up on the week. At current, we are above resistance. For those folks not familiar with the software I'm using, it's TrendSpider Automated Technical Analysis. Link below, 35% discount code. Cheapest on the web because I do so much business with them. I want to create an alert at this level. I want to know going into next week when we retest the support level. That's a good risk-reward entry point because I don't want to buy it right here, right now, because you can see sellers are already moving in. Why? Because you have overhead supply back here. I don't think it's a lot of supply to work off. Yeah. I would like to see a pullback and a retest here. You had a very close to a spinning top formation yesterday. Kind of a sign of indecision. I don't think it's asking too much to see a pullback and a retest of support. You have another, I like the way it closed yesterday, right at the top of this volume shelf. Actually, just shy of it. We did not break out. I thought we did. That's the value of using annotations. So a close of 95.40 would have me a bit more bullish, but ideally we're pulling back here to around, I can't read this font, I think it's 93.76 to $94 a share. In that range. XPO looking good. Do we have seasonality here? We do. 17 years worth of data. We are in October, a very favorable month for XPO. Take note of November. It drops down a bit, but it picks back up. It's still favorable in November, but it spikes back up in December. So this is a seasonally, I always want to say seasonally favorable period of time for XPO. All right, Sam. So Sam, yeah, myself, I have works for 100. Yeah, inflation is going to be horrible. Inflation is going to be absolutely a nightmare. NEE for RL. Nextera. Pretty chart. We have a monthly breakout at current. Just keep in mind that we've faded the past couple of months while we've been above the 280, 270. So just be aware of that. But very strong month so far. Weekly chart, very similar to the monthly chart. Strong. Stokes hooking up. Exactly what you want to see. RSI has broken out. Here are your Stokes. Exactly what you want to see. Daily, really nice here. Really nice. We're above 50 on both Stokes and RSI. Some out there may say, Stokes are over 70, Bob. It's ridiculous. Yes, you may get pullbacks and backing and filling. It's a sign of strength. People so misuse the stochastics, it drives me crazy. It's a sign of strength. Momentum. So we have a clean breakout here. We're not through all-time highs yet. I think it's very possible that we do break out to new all-time highs. Is this an alternative energy play? Because if it is, and odds are favoring a Biden win, names like these are going to do very well. Whereas those companies with that produce fossil fuels, carbon emissions, etc., they're gonna get whacked. But alternative energy plays are going to do very well. So NE looking very nice here. Let's check out seasonality. I don't know how much we have. Oh, we have a lot of data here. Going back to 1983. It is an alternative energy play, Sam. Thank you. Thanks for that. All right, October, the best month of the year. Going back 37 years. November, a bit weak. So we're rallying into November, pulling back and consolidating we're rallying in October, pulling back and consolidating in November, then following through to the upside in December. So interesting period of time. So seasonality is at your back. Let's splice this a bit. And let's go back to, let's do a 10-year look back. So October of 10. See if it's consistent. Oh my God. On a 10-year time frame, seasonality is up 10%, 91% of the time. You get a much stronger pullback in November, but you still get your same bounce back into December, and an even more powerful January. So seasonality on a 10-year look back is even more favorable for October, December, and January than the 30-odd year look back. But November, just keep in mind, is a bit more volatile. So just be aware of that going into November. SEDG, and then we'll go to Cisco, and we'll call it a day. It's got institutional support, Sam. Hey, Sam, I heard you guys, Sam, for folks who don't know, Sam is a long-term viewer and always a great participant, and he lives over in Italy. Sam, I heard there was a spike in COVID over in Italy. Is that our fake news or is that reality? Jesus, this thing's on fire. Oh, Solar Edge. So it's an alternative energy play. These things, why are my Bollinger Bands not coming up? There we go. Okay. Really nice. Are you seeing a spike, Sam, in COVID over in Italy? Our news here is reporting that Italy is seeing a spike in COVID cases. And I was just wondering whether or not that's the truth. We have to ask now because we don't know what we're being spoon-fed. Yeah, and the last time I looked at JKS, it was extremely overbought. So we'll drill down on that. I even want to take a look. Sam, my nephew had to stay at home because one guy got the corona. All right. Well, my prayers to him. All right, so SCDG in Fuego, monthly chart, weekly chart. I mean, there's more room here. I mean, this can go higher. There's no overhead supply. So, yeah, it's becoming overbought relative to its third standard deviation Bollinger Band, but it can go higher. So, are solar energy stocks about to crash? I think that's going to be the question of the day. Not yet. Not SEDG anyway. I think there's potentially more room to the upside. We have RSI on a daily basis, which is at 83.71. And if you read technical analysis for dummies, they're going to say, "Oh, Bob, you got to short that. It's over 70." No, it's not the truth. This stock can go a lot higher. You could easily see RSI 85.90 here. Let's do a look back on seasonality. Not much data here. It only goes back 5 years. I'm even reluctant to, 6 years. So, all right, we'll go with the 6-year period. I feel a little bit better than that. You don't want to go with too thin of data, 3 or 4 years. It's just too thin of data to speak about. But seasonality-wise, on 6 years' worth of data, I want to express that. It's only 6 years' worth of data going back to taking a look at October, up 67% of the time. That's certainly consistent with what we're seeing now. The back half of the year and the first month of the year, very, very favorable periods of time for SEDG, in particular, January. And what I'm noting here is interesting, is that you still have a lot of holds on the shares. That leaves a lot of room for positive headlines vis-a-vis upgrades. When you see a hold, that's equivalent to a sell. So if Canaccord or JPM, they go to buys, there's more upside here. So that's good stuff. If everybody was a buy here, I would be more reluctant to speak positively about it. But we do have some headline tailwinds here that could emerge. So good stock, looking good. Now, JKS, I was talking about it the other day as a potential short. And it did give up gains right here, but it did rally off the lows of the day. We shot up higher. RSI is now at 92.30. Still on massive volume. Four-hour chart. I'm going to be looking to take a piece of the short side here. It's not a bet we're going to crash. But this is unsustainable. So we'll look to scalp it for short. I would not be along into the election. They're pulling up a Biden win. They're already pricing it in. So even if he wins, expect a sell-off in these names, assuming that this rally continues. Cisco. We're going to leave off with Cisco. Okay. Let's go to a monthly chart. Do we have a higher low? Maybe. Let's get rid of this. Let's hold this. I want to see whether or not it closes above this support level. I was going to move this annotation to connect the lower band of this month, the lower low of this month. Excuse me, the lower price point of this month, blah, blah, blah. Still early, first cup of coffee, up late last night. I need a pass this morning, folks. Weekly chart. Still not convincing me that we've seen a bottom here. This is an ascending wedge formation. I mean, from a monthly view, it's looking promising. But the fact that we can't trade above, actually we are above it slightly so far this month, this resistance level, will we close there? That's the big question. Will we close there? And does it hold next week? I'm not loving this setup. Maybe the daily chart will sway me a little bit. Got to close above resistance here. I would do this. The line in the sand is right at this price point here, 39.55. It's got to close above that mark. You might have a W formation going on here. In fact, I think you do. Here's the left side of your W. Pivot point. Right side forming. You need a breakout. Stokes are beginning to break out. RSI beginning to break out. So you see some promising price action on a very short-term basis. You need to finish the week out strong, and ideally above that 39.55 mark. And we're right there. Let's take a look at seasonality. We know we have a lot of data here. This is a 10-year look back. Not a seasonally wonderful period of time. December, it becomes far more encouraging, and even into January, February. But October, November, it's hit or miss. Going back 10 years, if you want to go back all the way to 1990, it used to be a lot better. But let's remember, these are the growth days of Cisco. Cisco's growth is nowhere near what it used to be. This is the build out of the internet. So Cisco, it's a show me stock. It's got to show us it can close about 39.55 on a weekly basis. When should we exit the market pre-election? It depends upon what the market does going into election. It's an interesting question. I think it's not about if we rally strong into the election. I think you're going to want to hedge no matter who wins, because if President Trump wins, and I'm right in my opinion that in his final term, because he can't run for re-election, in his final term, he's going to have the country bite the bullet and fix the fiscal nightmare that we're in. It's not going to be bullish for stocks. I can tell you that right now. It's going to be very, very bearish for stocks. So while I want him to win, unfortunately, I don't think it's going to be the best of environments for stocks. This is me. While he's got my vote, but I'm being a realist here. And knowing the guy, going back to the late 1980s when I began studying and really studying the guy, I think that is what he's probably going to want to do. I think his legacy is he's going to want to fix this country. So that's my opinion on Trump. Now, you're going to have certain sectors that are going to do very, very well under a Biden administration. And you're already seeing that, yeah, that's a good point. Infrastructure should do well. I think it needs to get, under both administrations, it should do well. But let's face it, under Obama, Biden, they were talking about shovel-ready projects, sending out trillions of dollars to companies in reality that were going bankrupt. You had, was it Consintra, whatever that company's name was, and it wasn't even an American company. And there were no shovel-ready projects. They lied. I don't know where that money went to. There's been no accounting. Solyndra, that's the name of the company. So do we see more corruption under a Biden-Harris administration? Probably, because they can't say no. They're swamp creatures. So if you see a rally into election day and you get a Biden win, I think that you're going to get a correction anyway. If you see a big sell-off into the election, you may get a pop higher on a relief rally after election day. If you have an extended period where we don't know who the president is, well, we know what happened back Bush v. Gore, and it wasn't good. I think the market pulled back around 15% by election day through to the lows of that trading period of when we finally found out who was the president of the United States. Now, the market bottomed out prior to the decision by the Supreme Court, but we did have a 15% pullback in the markets. I believe it was the S&P 500 that I measured during that time frame. So the potential's there for a major pullback in the markets post-election if we do not have a clear winner. So that's my call, and that's it. Folks, join us tonight, Thursday Night Futures Live, please, 6 p.m. Eastern Standard Time. If you're not on an email list and you want an alert, use that link below, 15-minute alert. Smash the like button. Follow me, please. And everybody have a profitable trading day. Be well.